Forget your top 10 altcoin video fix for just one day. If you own altcoins, if you own any cryptocurrency, for the Lord's sake, please take the time out of your day to watch this video and understand who is going after your altcoins. Who, and I can tell you right now, it's the smart money, it's the whales, are going after you and your emotions to acquire your altcoins at dirt cheap prices. Now, I'm going to outline in this video, I think, one of the most succinct ways you can understand how this market has been progressing in terms of altcoins based on the two previous cycles and how things are just happening as planned. Now, do I think things are going to be sunshine and rainbows for the next 6, 8, 12 months straight? No, I actually think there's going to be some more short-term volatility, as it will soon show you. But I do think, personally, non-financial advice, there is a silver lining due to come. We just have to push through the storm like we're on a boat in the ocean. The best thing to do is just go straight through it rather than trying to go around it. Most of us are looking into coins like Render, or matter of fact, any altcoin in the crypto market, and seeing this chart on the 1 year time frame and thinking there's nothing about this that screams anything remotely good. And if we try to have some confirmation bias, some hopium, and think, well, let's click the all button, it looks even worse because most of the coins, especially the low caps, are back to their 2022 lows in the bear market. Coins like Render are actually one of the best. And again, keep in mind, this coin's actually fallen about 80% from its recent highs. So it's very easy to get caught up when influencers start screaming to you, and again, maybe people who you look up to, right? Actual leaders in the space saying there's no coming back, there's no form of alt season that will come around this cycle, things have changed for the worse. Again, the goal of this video here is to just show you behind the scenes. You don't have to believe me. Matter of fact, I suggest you do your own research, but it's to help paint a different kind of picture than likely what you've been exposed to recently. For example, you can see here, retail have been selling off ever since we pretty much broke here up to about $100,000 Bitcoin price, selling off out of fear, while the whales have been accumulating and accumulating. Let's look towards coins like Render, because any coin is like Render at the moment. When Render went up to $2 over here back in 2021, and it did fall almost 90%, I guarantee you, and a lot of you guys right now are probably asking the same question, I'm going to just sell out of all my positions, out of my entire portfolio when I'm back to break even. The problem is, when break even comes, it's not after a slog where you've had to wait a couple years in order for you to get back to break even. It's come after a 4.5x after a couple months. And then you're back to break even somewhere around here, or maybe even up here at the worst case. And then you're like, well, it's 4.5x. It's probably going to do more than that. And you'd be right. It would. But again, you're emotionally invested in the coin. Now you're tethered not to the fear, but to the greed. And this fear and greed, playing with the average person's emotions, making them believe the bull run's about to go parabolic or believe the bear market is only just starting, allows them to pick up prices at extreme discounts or make them actually materialize their gains by convincing you to buy when they're selling. This chart explains things, I think, perfectly. This is ISM's PMI index. All this does is tell us, roughly speaking, when consumers in the United States have confidence back again to want to buy. When consumers, again, people like you and I, throw their money in the market, this is when whales love to send prices higher because they need this new money in order to actually achieve these high multiples. You can see here, this top chart is actually total too, which is every single crypto's market cap excluding Bitcoin. And what these green zones show is, as you can see here, it shows alt season, okay, every single cycle. So that's, of course, what we're waiting for. Now, alt season, of course, will come around once, as this chart shows, consumers have confidence and are spending again. And you can see, we're nowhere near where we need to be right now regarding the state of the consumer, at least in the United States. So in between, when we see coins like Render, for example, when we see any coin for that matter going up or coming down, this is all just altcoin chop. Okay, this doesn't mean Render from the price of $13 down to $4 here has lost 3 times the amount of value single-handedly because of something Render's done. This is altcoins and altcoin volatility alone. There will likely be, obviously non-financial advice, a point in time where it's like back here in 2021 where it goes absolutely parabolic. Okay, this is likely to happen if we see an alt season here for strong coins like Render. But again, right now we're in the equivalent of back here. going up a 10, 15x, coming back down, 80%, coming back up a couple multiples, back down again, 50%, then back up. So it's just a part of the game. Now, many of us believe in the, short, mid, and even long-term success of a coin like Bitcoin. So we obviously take these drops. We take these drops as they come, 20, 30, 40%. We know they're coming, and that's okay. We're expecting it because long-term it's great. Alts don't have the luxury of being around for, the next 10 years. Some of them will be, of course. So we're much more skittish when it comes to holding these coins. And when they do drop, we think that they possibly could go to zero. It's just that most of us are not risk adverse. We're not careful with how much money we put in the market. So when we see our coins evaporate, super quickly, or when we go and buy micro caps or meme coins that you see influencers tell you will 100x tomorrow, then of course we develop into the risk curve here, which means that when we actually see our portfolio move down substantially, we're not prepared for that mentally. And again, whales are happy because when this happens, they just buy coins for cheap, and they know if you panic sell or you're super fearful, when they do eventually send prices higher, or when the market finally says, okay, we've got confidence back in because of X, Y, and Z reasons. Again, maybe one of those reasons is because consumers have confidence and excess capital to throw into risk on markets. This goes up and you get super greedy. You don't care that we were in fear before. You don't care that you were previously saying, I better just get out at break even, because you are thinking in one dimension. You are thinking purely on an emotional level. It's almost insulting, I think, as far as we know right now, to buy anything other than Bitcoin for the bear market years. For 1, 2, and the last 3 years, it's been Bitcoin season. These little pumps alts have, we can't expect them to be sustained. So they're of course going to always come back down again, which is why I've made previous videos saying it's probably important that, in retrospect, we take profit in Bitcoin season if we are in alts. But that does also mean that we do have a high likelihood of alt season still happening, as it does. But this only happens once every 4 years, at least based on history. Obviously, cycles are elongating now, as we know, based on this particular price action. It's actually happening rather than the start of the blue zone. It's now happening towards the end of the blue zone, which means we could still see some more strength coming out of Bitcoin here. But eventually, if things play out as they are, but just longer, a pretty strong alt season eventually. Keep it in mind that, of course, your greed is going to be just like fear right now, where you feel like getting out, but instead you'll feel like just throwing everything in. What I want to do now is actually take a look at the cycle in terms of where we are right now for altcoins. This is Chainlink, and I want to look at Chainlink and also Solana based on the previous cycles, but the only way I'm going to be able to tell you why this point, this and this X right here could likely lead to maybe some short-term volatility, but I believe a huge alt season here in the coming months is just because of where we are based on history. I need you guys to pay attention. We're going to have to zoom out here very quickly, first of all, but it will tie back into this recent price action here in just a moment. I want to look at it through miner revenue, or the pure multiple score here. All this score is this blue line you can see behind me here. All that is what the miner's revenue is today versus the last 1 year, 365 days. When this is above a score of 1, that means that miners are making more money today than they were in the last 365 days on average. If it's lower, they're making less. Okay, pretty simple. There are clear patterns playing out in the pure multiple you can see behind me, as well as other charts I will mention to you later on, like this chart here, which is the average cost basis, the average buy-in price of Bitcoin holders, in which obviously we can get a pretty fair assumption of whether it's overvalued or undervalued, or overbought or oversold. Okay, but for the sake of this video, we're looking at it through, I think, very good lenses here regarding miners. Now, what I'm looking at is 2023 to the current day's price action for Bitcoin. This is Bitcoin's price up here. And this, again, is the pure multiple. Now, we're looking specifically at the pure multiple here in these three, yellow, orange, and red circles. Now, these are all local highs, okay? Local highs, but you can see here, there's a higher high here, and a higher high here on Bitcoin's price. But they correspond exactly here with a higher high or a local high here in yellow in the pure multiple, a higher high here in orange in point number 2 exactly, and number 3 is actually a lower high. It's a local high, but it's a lower high compared to the others, right? And so what does this mean? Well, actually, if we look at the two previous cycles, we look at the 2015 to 2017 and also the one last cycle, which was, again, a bit of a different cycle. This was a Frankenstein cycle, right? It was wrong in both ways. It happened too quickly and it closed too soon. Anyway, It's very, very similar. And this gives us a very good glimpse into what is likely coming next. Again, to save you the trouble of breaking this down in an nth degree here, and I'll get back to altcoins in just a second, you can see if we run through some moving averages with the pure multiple score, that the 200-day here in orange crosses above the 1 year here in red. That signals quite a bullish time, okay? That's a bullish rally. Now, we can see after this particular cross here in that bullish rally, we have this yellow circle here signal, all right, the local high. What happens then is we continue on this bullish trend into this second local high or higher high, in which then miners' revenue drops off. This is because of the Bitcoin halving happens. And then we have the crossover here. So the 200 moves underneath the 1 year, and that signals bearish momentum, obviously because they've had a massive drop off in their revenue. It's literally cut in by half, right? And this eventually builds back up again over the course of time in this consolidation period. Now, here's the interesting thing. This lower high in red here always happens in the pure multiple score after this, but before that final crossover where the 200-day goes back above the 1 year. Now, why is that important? Why is it important to know when this actually happens over here, when the 200 crosses above? Well, remember, this is bullish momentum happening right in front of our eyes. And this happened back here as well. You can see this crossover happened, all right, way back here before the first top. Again, bullish momentum still in the second top. And then the bearish momentum happened, and then we had the third top before that final crossover. This is back again 2015 to 2017. Again, this corresponds with a higher high, and a, sure enough, higher high. The exact same. Okay, lower high down here as well though. So higher highs in Bitcoin's price, higher highs here, and then a lower high here. But it's the momentum building back up for the miners and miner revenue on the bottom pure multiple score here. That's the whole point, is miners are regaining, again, some of that revenue back. So again, when this signals, when this crosses over, what do we have? We have, of course, the actual bull run. Even as far as the last cycle, 2019 to 2021, again, this was more of a Frankenstein cycle. I mean, a lot of stuff shouldn't have happened, and there's also proof on this chart to show that. But basically, again, we had the same pattern play out. We had this cross happen, bullish momentum. This first higher high happened over here with a, again, local high. Alrighty. Then we had, of course, these bands in the bullish, and you can see momentum was building back up here and even in Bitcoin's price here to likely form another higher high as normal, likely over here. But what happened? Of course, we had the black swan in the pandemic. We still had the minor drop off here in revenue, of course, thanks to the halving. And then we trotted back up again, you can see in the same consolidation period until we had this third high. Now, this was a lower high, at least a lower high compared to here. Barely, as you can see. And I'll actually draw that on a chart here for you guys to see yourself. So it was barely a lower high, but it was a higher high versus back over here. So again, I think that the main reason we had a bit of a skewed cycle was very, very similar, was because, again, the moving averages crossed over here again, coming down prematurely as when it should have. And we also have charts like this as well, guys. This clearly signals that we are actually right on track at the moment, okay? And again, it just shows you, thanks to moving averages, it cuts out all the noise that comes with the, gains and then the massive drawbacks and then the gains and the drawbacks. It cuts all that out. This is a great way to assess things, and I'll cut you a long story short because I've covered this again in a recent video in quite a bit of detail, that again, we're on track. We're exhibiting the same details we had in the 2017 cycle, in the 2014 cycle even. It's just happening longer. The macro crypto side of things, it's running smoothly, all right? Altcoins have suffered so much, and here's the big kicker. They've suffered so much, not because of the crypto cycle, they've suffered because consumer confidence in the world, in the macro sense, has diminished. And I believe that can be quickly evaporated once these tariffs tend to ease off, or the market just digests the news and gets used to it. Markets hate uncertainty, obviously. So when things become certain or relatively predictable, they will turn around. Now, unfortunately, as much as I think that we are completely synchronized to the 2017 cycle, in the sense that it's the same, but just drawn out longer, unfortunately, we can't use this because, again, the altcoin market was much different. Bitcoin was not even $22 billion back then. We have to use, again, that sort of Frankenstein cycle of 2021. But the good news is it's actually very similar. You see this here, number 3 in this dotted red line. This 3 represents this third touch over here. So this right here, this lower high in terms of Bitcoin's price, which technically should have been a higher high if this didn't happen, right? And this lower high down here, this happened exactly all right, at this point right here for Chainlink. We'll look at Chainlink and we'll also look at Cardano, okay, because they're actually two of the larger projects in crypto at that time. They were top 10. And the reason why is because if these coins can do some of the multiples I'll show you here in a second, of course, the smaller coins we're looking at today with more money today can do even more. Not to give you hopium, but it's just true. After that big pandemic, I'll move my head here, that big pandemic happened, the general buzz in crypto came back, and again, we had consumer confidence. That's what caused all the coins, you can see here Cardano as well, moving up with this general buzz, and thanks to QE as well. Then we had this crash after the third touch. You can see here, same thing. The third touch happened. Again, that third touch is this point right here. That happened. We came down 60% here for Chainlink. We came down here 51% for Cardano. We trended up, and then this red X. What does this red X mean? Why do I say we're here in a shorter cycle? This red X is actually where we are, as I said, right now. We are here. We've actually just seen the 200-day moving average move above the 1-year moving average, which again is that very bullish signal. That's the signal down here for the bull run. The good news is, again, all these coins did quite well, right? You can see here that Chainlink was actually pumping in the first part of that cycle. It pumped up with that first artificial high back in May. And you can see Bitcoin's actual all-time high was over here. So Chainlink still did pretty well. So pretty much from this point, we had a good 1 year, 319 days in the cycle. But Cardano was a bit different. This went up to 100 billion market cap, and it did like almost a 20x, I think, right? It did an 18.5, 19x from this particular point in time. Alts had a retracement after the third touch. Again, that's where we are right now. And right from this X, they went up. So again, this is where we are at the moment. Okay, we've had that massive dip. Okay, that general just bad behavior from alts and Bitcoin. Everyone's been kind of FOMOing out of the market. General buzz has brought us back again, of course, thanks to Trump signing all those executive orders and the rest of it. Now, we had that third touch at this exact same time, which is kind of crazy to look at. Okay, this high over here, we literally had Chainlink hit the all-time high, Cardano hit the all-time high. A lot of altcoins did at this particular point in time. Now, like you saw before, again, it took around 320 days from the X to actually go to the all-time high. So that would put us, roughly speaking, somewhere around January of 2026, going on the previous cycle. But as I've said, we are lengthening, so it could be a lot longer. But either way, it's just incredible to see. We're actually playing out. This is Cardano, and this is Cardano in the previous cycle. I mean, we're playing out, look at this, exactly the same. So this is obviously a fractal drawn onto this chart here just to give you an idea of what may happen. At the end of the day, be risk aware. Don't put too much money into the market. This is not financial advice, of course, but you shouldn't let some of these swings that are susceptible to a volatile, a speculative market like crypto sway you out of your bag. So thank you for watching this whole video all the way through. I know it's been a long one, but I hope you have enjoyed it. And if you have watched it the whole way through, you can let me know you have with a like down there. I truly, sincerely appreciate that. And I will look forward to seeing you guys on the next one. Take good care of yourselves. Bye-bye.